The collision of the two global trends presents a new challenge for closely held companies. The demographic pig in the python, if you will. That's the aging baby boomers combined with the dramatic increase in market value over book value that's created trillions of dollars in embedded value, which will be transferred in the decades ahead.
In 2006, the first of the baby boomer generation turned 60, and for the foreseeable future, approximately 8,000 boomers will reach that same milestone. With trillions of dollars locked in the equity of closely held businesses, boomer business owners are beginning to develop strategies for unlocking their equity. They also face the emotional issue of succession planning and perhaps their own career mortality. It's a tough process, something experts say you shouldn't attempt on your own. Paul Mueller is co-leader of UHY Advisors National Tax Group.
In the transactions I've been involved with where businesses have moved from a parent to a child, it's interesting to see, particularly when there's children in the business and children outside the business. It's amazing to see how all of those unresolved sibling issues all of a sudden come to the front. I mean, we could be talking about people in their 40s and 50s who those issues about how mom and dad treated one versus the other do come about. And oftentimes those transactions will fall apart as a result, and definitely need outside assistance.
The family-owned business or the family-controlled business often brings with it issues related to the emotional attachment to a business. It is very common, particularly for the founder and the very next generation, to look at the business as almost as another family member, as a part of the family. And that can often lead to perhaps skewed economic decisions or perhaps being too risky, taking excessive risk, when in fact the economics of a particular industry or a particular economic cycle would dictate a more conservative approach. Can also lead to perhaps making risky economic decisions to keep family members involved in the business if the hope of the family members in charge is to keep the family together with or through the business. So the family business faces additional challenges, which I would like to characterize as the emotional business decision aspects.
And besides these emotional issues, there are a number of equity distribution options, according to UHY Advisors Paul Mueller.
There's either external transactions or there's internal transactions. And if you look at internal transactions, it's going to be just the redemption technique. That redemption could really be a bridge towards an employee stock ownership plan, so that the company is buying back the stock but is contributing that stock to an employee stock ownership plan, or the company is funding an employee stock ownership plan and the plan itself is then redeeming the stock from the owner. That's an internal transaction. Another type of internal transaction would be like a succession situation with a key employer or with a family member. External transactions are going to involve, obviously, third parties, and those are typically going to be either a sale, outright sale, could be a sale of part of the business, sale of the entire business, sale of assets instead of stock, could be a merger with a public company, merger with a competitor, but those it'd be either typically internal or external. ESOP plans are expensive to implement. They're expensive to maintain because they are qualified plans. There are reports that have to be filed with the government every year. There are valuations that have to be done on an annual basis. So the administrative costs of an ESOP plan has to be factored into the overall consideration.
For some companies, taking the company public is another option to consider.
The advantages are obvious. The ability to access the capital markets for funds to grow to the next level instead of having to fund all that out of current earnings. The ability to create a ready market for the stock if an owner is ready to cash in at some point in time. The obvious downsides are the fees, the cost of going public, not just the cost of going public, but the cost of staying public with the filings that have to be made quarterly and annually with the SEC, and then the loss of control, and the fact that you now have investors who oftentimes have heightened expectations in terms of the operation. You fail to meet those expectations, the impact that the markets can have on value. So that's an entirely new dynamic. It's certainly with the recent change in the makeup of our Congress, there seems to be a consensus as to finalizing the future provisions of the estate taxes and how I think they're going to lock in some higher exemptions in that area, which is going to be a windfall for a lot of family-owned businesses, that a larger amount of value can be transferred from one generation to another without any taxes being imposed. That there's certain estate tax exemptions for transfers of family-owned businesses, but those typically aren't key drivers in the consideration. Probably the biggest consideration in the transfer of family-owned businesses is the fact it's family, and there's always a difficulty in separating emotion from business reality. And I think the desire on the part of most business owners to treat children equally or with equity or with fairness oftentimes gets in the way of pushing through transactions of a business nature. The emotional side, the familial side, and the business side often conflict.
I would recommend that the owners be rational and not sentimental. It's easy to be sentimental with family members and with family heirlooms, but the business is not a human being. It's not a person. Be rational. Seek quality outside advice, quality outside legal advice, accounting advice, financial advice, financing advice, marketing advice. Seek that advice. Some of the advice can be developed, or some of the answers can be developed internally, and that's great. But be open to obtaining information from the investment bankers, from the accounting firms, from competitors that you have a healthy relationship with.
I think the best piece of advice I could give to a business owner would be the same thing that you see on some of those TV commercials where there's a disclaimer that says, "Professional stunt driver, don't try this on your own." And I would counsel a business owner that don't try to do this on your own. There's family issues, there's emotional issues, there's financing issues, there's legal issues, there's tax issues, there's accounting issues. There are so many issues involved that you have to have that team of advisors to walk you through the mechanics of the transaction, how to avoid the traps in the transaction, how to maximize value at the end of the day on an after-tax basis. And you can't do that alone. You have to have that outside objectivity.
So, today we've seen how one company is weathering their eye of the storm, coping with the competitive pressures through a sustainable strategy of mass customization that doesn't erode margins by competing on price. Hanny's ability to fulfill 25,000 customer orders a year, oftentimes on a tight timetable, demonstrates sensitivity to their market and gives them a unique position that they hope leaves the competition reeling. We've also seen how the Hanny family has set boundaries, held family members to objective performance standards, and fostered a family atmosphere for their workforce, thus overcoming some of the issues faced by closely held businesses as they compete with larger companies. And finally, we've heard from two financial gurus about the strategies for transitioning ownership and liquidating equity, which allows the organization to sustain itself while letting the owners prepare for opportunities to further embarrass themselves on the golf course with even more frequency than they do today. Like we've mentioned earlier, Business in the Eye of the Storm is more than this TV show, because we want to give you even more food for thought. Now, on our website, www.businessintheeyeofthestorm.com, this month you can join in an online conversation with our resident experts about issues that might be facing your business related to the transfer of equity and the challenges of family-owned or closely held businesses. You can also download UHY Advisors' benchmark report on equity transfer with data from equity transactions in a variety of industries. And it's all free at www.businessintheeyeofthestorm.com. I'm Steve Samick, and that's it for this episode of Business in the Eye of the Storm. And oh, be careful out there. There's a storm coming your way.